It is Friday, November 2nd, 2018. It is 8 p.m. Pacific Standard Time, and so you know what time it is. It's time for a little bit of coin metal. And it was a survivable, barely survivable, get your ass kicked at Jiu-Jitsu Friday. Jesus criminy, I was having so much trouble just doing anything more than surviving today on the open rolls. I don't know what my problem was, but that dude was on me like fucking white on rice, and I was having so much trouble trying to reposition him. I did manage to avoid getting submitted, but by a very narrow margin. I've tried sneaking him up with a Americana, and I probably would have put him away with that. And I also tried to set him up for a Kimura. But I guess I was a little bit too obvious in what I was trying to do. Maybe if I had just pushed his wrist towards his hip, he might have thought I was just trying to get around it to his back or something. I don't know. Like I said, there was something just missing today. I don't know quite what it was. Just my intensity wasn't quite there. But I did manage to stay alive, and that's about all that can be said for it, man. And I find that kind of embarrassing only because I have started to feel a little more proficient on the mat in changing up my position. I think one of my problems was I was just so desperate in holding on to him. If I were letting go a little more and just focusing on maybe establishing frames and keeping him in my guard. I don't know. It like I said, it just wasn't quite there today. And I don't know what I'm gonna have to do about that. I think it might be a little bit of spillover. I've been kind of frustrated because I've been working on my vehicles, and one of them I just got it finished, and I'm still kind of feeling a little nervous behind the wheel with it. But it when I drove it home today from Jiu-Jitsu, it felt a lot better. It's like, okay, the fixes worked on this one. Now I just got one more to conquer, and then one more, and then after that I ought to be in the clear. But I did manage to get a little bit of stress out of my way this week. I had one project still going with the potential of getting rotten. And so rather than letting that fear become real, I had a day when it was raining outside, and so it's like, fuck it, I'm not going to work out there while it's raining on my vehicle, so I might as well go ahead and take care of this because it's an indoor thing. And in all honesty, I think I caught it at just the right time. There's ripe, there's really ripe, and then there's overripe. And the line between really ripe and overripe is very, very fine. Okay? And usually people use things like bug blight or dying leaves to kind of signify that kind of thing. And so I was noticing that it was having a little bit extra trouble keeping the leaves nice and healthy. I mean, for the most part, everything was nice and perky, but there were some signs, some discoloration in a few of the leaves, and I'm like, okay, it's getting about that time. The humidity is up in the air, and it's getting a little colder at night. It's time, and so I took care of it. And like I said, I don't think I could have done it on a better day. If I'd have waited just 2 more days, there were already some spots where a leaf was rotten, and I mean, all it would have taken was 2 or 3 good days of high humidity, and that would have fucked everything up. So, like I said, I don't think I could have called it any better. But now I'm waiting for that to finish up, and I'm terribly excited. It was probably the prettiest thing I've taken care of this year. And so there is kind of an odd sadness that you get at the end. It's like, because you're used to walking out there and seeing this beautiful thing in there, and you're just like, oh I love it, I love it, I love it. And you're focusing all this love and care and all that. And then one day you got to go out there and cut it down. It's kind of sad. Anyway, it's got to happen, right? Got to take profit sometime. And it is with that, we're going to go ahead and throw down into some music. And after having launched my my beloved Bitcoin Cash today, I'm feeling a little frisky about the old portfolio, and so here it is. Body count, ski mask way, first dance, here on Coin Metal. And that was Static X with Cannibal. Man, I love that song. Get your blood pumping. Anywho, I didn't want to spend all night playing music. You know, sometimes you really got to wonder exactly where people's minds are, where their what their motivations are. You know, and I do that a lot. I know it's a terrible habit sometimes, but I've been seeing some certain things in crypto that have had me a little bit concerned, but I mean more curious than anything, because it really comes down to choice. And I think it's really entertaining when people start saying like, you know, I'm a Bitcoin maximalist. You know what, dude? If I offered you enough coin in some other coin, you'd fucking take it. Don't give me that bullshit that you just take Bitcoin. That's bullshit. If you've already made the conceptual leap over to cryptocurrencies with Bitcoin or Bitcoin Cash, you've already made the leap that's necessary to entertain the idea of cryptocurrencies as money. So what's the difference between one cryptocurrency and another? I mean, certainly there are value differentials. You know, what motivates the people behind the coin, you know? And I think that people can lie to you today and they can lie to you again tomorrow, but eventually they're going to say or do things that lead you to understand what their real motivations are. And of particular concern to me has been Craig Wright, only because it seems like this guy is always like in some sort of contradictory state, you know, as far as like, you know, there's always something that's like bugging me in the back of my brain that's like, this guy can't be who he says he is or what he says he is, isn't doing the things that he says he is, hasn't done the things that he says he did. You know, there's just too much that's not right about him. And so, I mean, the guy's a nice enough guy. You know, I was following him for a while on Twitter, and then one day he decided to block me. And it's just like, what the fuck is that about? You know, that's what the core people started doing when they didn't like what I was saying. They'd started blocking me, and it's like, okay, what the fuck is going on? You know, this is supposedly about consensus, right? That means that we care about what other people have to say about stuff. You know, that we care about our users, that we want people to use the coin. Well, when you start blocking people, when you start censoring people, that says, I don't want other people to see what you have to say. I don't agree with you so much that I want to cancel people being able to see your ideas. When it gets to that point, you're not talking about consensus anymore. You're talking about some sort of governance where it's top down, where we have standards and protocols of behavior, and if you don't match those, well, get the fuck out of here, kid. That again is not in the best interests of everybody. It's in the interests of a limited group of people, and a limited group of people that want to continue to direct things, or would like to direct things, or would like to have the ability to direct things, or at least sell the ability to direct things to somebody else. And so I think that when you're seeing the kind of behavior where people are blocking you on like Twitter and social media and stuff, you got to start really wondering, start wondering what exactly it is that's motivating them to block you. And so, I looked on Craig Wright's thing because somebody had posted on Twitter something, and of course I couldn't see it because Mr. Wright had decided to block me on Twitter, and it was about taxation, and I didn't actually click on the story, and I probably should have because I wanted to actually read it. Oh, here it is. And if you know anything about Bitcoin, you know about the fact that it was in response, at least partially, to the bailouts that the banks were receiving for their stupid investments. And so here it is. I got this thing, it's on medium.com, and it's by Craig Wright. Tax and Bitcoin, transacting and accounting for Bitcoin. Alright, so this man is claimed to have been, or claims to be Satoshi Nakamoto, or has claimed to be Satoshi Nakamoto. When he speaks about Bitcoin, he speaks of himself as in the seat of Satoshi Nakamoto, right? So, continuing on. Just as with all income and capital taxation issues, Bitcoin-based transactions require that suitable record-keeping practices are adhered to. If this man were Satoshi Nakamoto, he wouldn't give a fuck about income taxes. Anyway, continuing on. Bitcoin transactions are public, and a permanent copy of the transaction is reported in the blockchain and can be viewed publicly. The addresses associated with these transactions should be recorded. This would be in a format that could include payer Bitcoin address, payer TFN ABN, or other identifying information, payee Bitcoin address, payee TFN ABN, or other identifying information, Bitcoin transaction ID. Another example is linked below, blah, blah, blah. The transaction ID is this. The unique number that records the particular transaction in the journal, the blockchain. In this example, the Bitcoin address is, gosh, at least it starts at the 1. Has transacted 29.99999 Bitcoins at a market rate of $2,049 at the time the transaction was completed. These Bitcoins have been transferred to the following address. We propose that a business records the address it is sending and receiving from to, and also records the transaction ID. Dude, this could be used as a record of the transaction, coupled with the market rate for Bitcoin and Australian dollar. The business could submit a tax invoice based on the transaction. Oh, thank God, he's just talking about Australia. Alright, I'm done with that. No, that's not what Bitcoin is for. I mean, really, if this guy were Satoshi Nakamoto, I mean, either like somebody beat the shit out of him and is coercing him to write stuff like that, or this guy isn't Satoshi Nakamoto. Funny part about all that, there are several people participating in cryptocurrencies right now specifically because nobody else knows that they're doing it. And I got this article here on Business Insider, and I think this is very telling, and to me this is an adequate response to Mr. Wright's proposal. Sundar Pichai's 11-year-old son is mining Ethereum on a computer the Google CEO built himself. At the New York Times DealBook conference on Thursday, Google CEO Sundar Pichai said his 11-year-old son was using the family's home PC to mine Ether. Pichai had been asked about how he thinks thinks about screen time for his children. A recent New York Times article described parents living in Silicon Valley and working in tech as saying they were often most concerned about excess screen time and tech addiction amongst children. Quote, "I'm like every other parent, I guess," Pichai said. "I do test a lot of gadgets at home, so I have vulnerabilities in terms of how my kids get access to stuff." Pichai then said that his son had been mining Ether, the cryptocurrency often referred to by the blockchain it powers, Ethereum. Quote, "Last week I was at dinner with my son and I was talking about something about Bitcoin, and my son clarified what I was talking about was Ethereum, which is slightly different," Pichai said. "He's 11 years old, and he told me he's mining it." The Google CEO was asked whether he had a server in his home to assist in his son's mining efforts, to which he said his family had only a simple computer, one that Pichai built himself. Pichai said he did have to explain to his crypto-minded son the nation's monetary system and how paper money actually works. Quote, "I realized he understood Ethereum better than how paper money works," Pichai said. "I had to talk to him about the banking system, the importance of it. It was a good conversation." Pichai's son isn't the only child of a Google executive who's mining cryptocurrency. At a blockchain conference hosted by Sir Richard Branson in Monaco in July, the Google co-founder Sergey Brin also said he and his son had been mining Ether. Quote, "A year or two ago, my son insisted that we needed to get a gaming PC," Brin said. Quote, "I told him, okay, if we get a gaming PC, we have to mine cryptocurrency." So he set up an Ether miner on there, and we've made a few pennies. A few dollars since. The interview with Pichai came on the same day as thousands of Google's employees around the world walked out in protest of the company's handling of sexual misconduct allegations. Quote, "This anger and frustration within the company, we all feel it," Pichai said when asked about the protests. Quote, "I feel it too." Yeah, I didn't really have any interest in the Google thing at the end there. That was just a little jab at Google or Pichai or the sexual misconduct allegations or whatever. I don't know. What I'm most interested in, though, is the fact that his 11-year-old kid, is mining Ethereum. Or was mining Ethereum, or whatever the case may be. I mean, really, what have I been telling you guys about, 14-year-olds having the power of Janet Yellen on their fucking home PCs, where they're hashing together their own fucking Genesis blocks and kicking it loose? See, I'm convinced that we are due for another alt bloom. Maybe not now. I mean, there seems to be a small trickle. Most people are still relying on that ICO bullshit matter of trying to launch their coins, and I don't see that as having any long-term success, honestly. I think a few companies and a few projects that were intent on fulfilling on their promises initially and have continued to address their promises first, rather than boats and hoes and all that shit, that they will be the successful ones coming up. But it takes years for these projects to really show you what they're about. And it's not necessarily coins that are cranking out new advancements or new partnerships or whatever that determines which ones succeed. It's, does the coin do what you say it does? Is it as easy as you say it is? Is it worthwhile to mine it? These are all very, very important aspects of the coin. Do I believe in the ethos behind the coin? These are the determiners of value for you. It's not something that the Fed can tell you. It's certainly not something that the SEC or the CFTC can regulate. We're talking about consumer confidence. Which currency do you feel safest and best using? When you look at the things that the coin itself supports, do you support those things? And, as far as I can tell, it seems like some kids out there are looking at these projects and saying to themselves that they value them more than their paper currency options. The fact that Mr. Sundar had to explain to his son about paper money and national banking, his son probably knows more about both subjects than he could teach him. His son probably understands exactly why Ethereum and Bitcoin and other cryptocurrencies exist with relationship to those banks. And I find it inspiring that it's not something that I'm just saying, that we've got actual evidence of it here. And I imagine his kids aren't alone. I imagine that in junior high and in high school, there's actually like cliques that are developing around cryptocurrencies. What? You support Dogecoin? What kind of nerd are you? You remember the kind of divisions that you had in school. I mean, shit, over music, over clothing, over politics, religion. And so now add to that, or consider the unifying aspects of cryptocurrencies, where they aren't delineated by any of those aspects or factors. None of those factors actually matter in Bitcoin. So we could be looking at cultural and social bridges in cryptocurrencies that are based, I think, at least on a more logical base. Where you can see the actual effects of your coin internationally. You can go on an exchange and see exactly what the market thinks of your coin. It was funny. There's somebody wrote something about ICOs, and I kind of went off a little bit. I basically described how we initially started cryptocurrencies. And this includes Bitcoin. We had an email, an IRC channel, and a few social media outlets. There would be a dev and some other supporters and of course miners. And we would put up on Twitter, hey, check out this coin, mine this coin, this is the pool. These are the pools you can mine it at. And that's how shit went. That's how we birthed cryptocurrencies. Bitcoin, Litecoin, all of them were birthed in this way. But, then along came ICOs built on top of Ethereum, which I thought was a mistake anyway, because of the fact that it all runs on Ether, and the value of Ether goes up and down on the market. And so whatever your project was worth yesterday, it may be worth half of that or twice that tomorrow. Because the underlying coin is Ethereum. And so you're dependent on its market value. I've always thought that was a mistake. But anyway, that's the way that we started cryptocurrencies. And so the idea that we need money up front or whatever, you don't need money up front. You need people that believe in your project. That's what you need. People that are willing to transact in your coin. People that are willing to mine your coin. People that are willing to host a fucking pool for your coin. That's what you need. You need a website for your coin. You need a white paper for your coin so people can review it and say, you know what, I really agree with this, or no, I don't agree with this. I think this is shit and I'm going to go FUD it all over Twitter. Bad news is good news too, because people investigate that shit They'll click on the link for the white paper and they'll either say, God damn, that guy on Twitter, he was spot on, he was correct, and then they'll go back and FUD it and even get more tweets sent around about your coin. But the people that you're wanting to get to will get to you. The people that do agree with your coin or believe in your coin enough to give it a try, they'll find you. You know? Look for the others. That's what Terence McKenna used to say. Look for the others. Look for the people that agree with you. We're not limited to physical location anymore. You know, geographic location is out. It's been out since the invention of the internet, basically. And one event really brought it home to me too. Was I was having a real-time conversation with a friend in South Korea via a handheld tablet, and I think it was either 2012 or 2013. The point being is the device was able to do it. It was in real time. The man was 8,000 miles of ocean away. And, you know, I look back on that now, and I think that if I had another device with a Bitcoin wallet on it, and he had another device on his end, we could have been sending coins back and forth all day long. Making that paper. See, I think those relationships exist now between people all over the planet. And they are doing exactly that. Trading. Getting around all those international borders and all that other bullshit via the ability of enabled by just using a regular old QT wallet. Or an Electrum wallet. And as a matter of fact, I had this thing here in, let's see here, where is it? Not that, no. Don't play shit. You know, I'm trying to find this specific thing I found. Side plugging, we might go there today. Damn it, Jim. Here it is. This one's on yours.org. And this one's by $5, whoever $5 is. But anyway, continuing on. This is the title for it. We were wrong. Bitcoin.com is not the best wallet for your hard-earned money. And here's why. $5bucks.com was launched on the 13th of August 2018 to bring to life our dream of seeing a freelancer's marketplace powered by a decentralized peer-to-peer currency. Thanks to peer-to-peer, the market participation of anyone with an internet connection would be ensured. Thanks to decentralized and proof of work, users would be protected against debasement. We are committed to making this happen. Yet these properties of Bitcoin Cash are currently under attack, and one vector of such attack is the Bitcoin.com wallet. We were wrong. Bitcoin.com is not the best wallet for your hard-earned money. Save your security phrase, delete the Bitcoin.com application, and use the Cash Paid app committed to following the longest chain or Nakamoto consensus. Although your funds are not at risk as we speak, the owners of Bitcoin.com have signaled that they are willing to go against proof of work. Majority hash rate ensures that your funds are safe. Going against majority hash rate is reckless and puts the funds of all users at risk. By going against express majority hash rate, Bitcoin.com signaled today that they are willing to label as BCH a minority chain based on today's distribution of hash power. This means that in case of a hash war, your Bitcoin.com BCH funds could include a minority chain and prone to disappearing overnight, worst case scenario. In the best case scenario, your BCH funds will no longer be peer-to-peer decentralized cash, but a corporate token controlled by the personal interest of few people. This means supply, transaction fees, user experience can be modified overnight, at your dispense as a user to serve a few people at the top. With money security coming first, good money cannot exist without the security that our funds will be in our wallet as long as we don't spend them. Bitcoin.com and their leader, Roger Ver, in an impressive U-turn from a few months ago, seem to think otherwise today as they disclose their intention to support as BCH, a chain with minority hash. Bitcoin.com is engaging in fraud. Bitcoin.com has been marketed as a website committed to following Satoshi's vision and the Bitcoin white paper. In the Bitcoin white paper, conflicts are resolved through a one CPU, one vote system. This is to ensure that decisions do not compromise the coin's security. For any proof-of-work coin, conflicts are solved in this fashion. Doing otherwise compromises security. Bitcoin.com's announcement today that they are going to add features against the express vote of those who secure the network goes against this core principle laid down black on white in the Bitcoin white paper. Bitcoin.com is using the authority of their domain name to break one of the cardinal rules of Bitcoin, which confers it immense value. By attempting to break the one CPU, one vote system, Bitcoin.com has de facto disassociated itself from Bitcoin and has nothing to do with Bitcoin. Important notice for our freelancers: you as a consumer have the freedom of choice. We encourage you to exercise your freedom of choice and disassociate yourself from companies that are trying to undermine the value of your hard-earned money. The best thing you can do now to defend Bitcoin is to save your BIP39 security phrase, delete the Bitcoin.com app, and start using CashPay, CentB, or HandCash instead. Interesting. Let's see here. I'm going to read some of the comments here. The first one is Robert Melouche. Sounds like core supporters. Fraud because you chose something I don't like? You're kidding, right? If you really think that the SV is the way to go, then make sure you have the hash power to back it up, because most of the regular BCH using business seem to be going with ABC or BU. And then the next one was a response. Robert Mulish, don't you get what is happening? The miners and some businesses are going on strike during the fork. They will take the money but refuse to take your transactions. Total lockdown. Next one is by Nelspin. SV having the majority is far from guaranteed. Also, your whole rant about Nakamoto consensus means that you should support BTC because it has a lot more hash rate than BCH. On another note, if yours.org could finally fix the comment function on Android, that would be amazing. The next one is by Bob Vance, ripbitcoin.com. Yeah, whatever. And next one is an anarcho-vegan. I've transferred my Bitcoin Cash funds from my Bitcoin.com wallet and uninstalled the app, as since I don't know the issues especially well, and with any reasonable doubt, withdrawing is recommended. It is not like I can't just install it again and put the funds back. I don't keep a mnemonic, but there is nothing in there, so it doesn't matter. How has Bitcoin.com signaled that they are willing to go against proof of work? Where is this announcement? Bitcoin.com's announcement today that they are going to add features against the express vote of those who secure the network goes against this core principle, and laid down in black and white paper. Blah, blah, blah. Also, your whole rant about Nakamoto consensus means that you should support Bitcoin. How do you know? Yeah, whatever. Sounds like herd supporters. Yeah. I don't know. It's interesting. I would like to know what they say here. I mean, how they're saying that. Let's see here. Robert Mulish. The only miners that have threatened to censor transactions has been the SV pool. That is the problem. Bitcoin is permissionless, and if you have miners deciding what ones go through, then it isn't Bitcoin. And this is a tweet by Craig Wright. As a heads up, any DSV spend will eventually be blacklisted on SV. You support DSV, then you will have unspendable coin. Watch, 2 years. That is my limit now. No sale unless this ends or it remains Bitcoin. Yeah, whatever. Haha, what a bunch of salty bitches. You can buy MUBSV coins or at your nearest exchange. Ha ha ha, this is awesome. Yeah, whatever. I think it's kind of interesting. You know, as far as which variant of Bitcoin Cash to support, I don't know. I think that'll get decided by the miners. You know, whether or not there's enough support to maintain the Bitcoin SV version. And honestly, I don't really believe there is. I believe that most of the people that are supporting Bitcoin Cash are comfortable with the 32 megabyte block limit, but you know, I could be wrong. You know, there's a whole group of people out there mining that coin, and honestly, I haven't had the opportunity to get into that, but I imagine in the not so distant future that I will be doing plenty of mining. In any case, let's go ahead and throw back down into some music. And I'm going to try and investigate that and see exactly what kind of signal there's, other than, of course, Craig Wright saying a bunch of weird stuff, and see what there is to that. And as far as what to play, I'm not entirely sure here. Let's go with a little bit of Rollins Band, Divine, here on Coin Metal. And that was Killing Joke with Loose Cannon. I was going to let it go one more just because it's prong, you know, and I really like prong. But I'm going to save them for a little later. Ding. Anywho, I kind of figured something out while I was letting the music roll there. I did do some of the selection, although I like to let the computer do it once or twice, just to throw me off my balance, give me something else to play off of. Anyway, so I've been trying to track down exactly where I think all this FUDding against Bitcoin.com is coming from. And see, I don't really like the Bitcoin.com wallet, only because it requires you to have a Google account, and Google is all about tracking every fucking bit of your business. So I don't like that. Fuck Google, and so by extension, I don't really care for the Bitcoin.com wallet. However, I did come across this interesting tweet, and I tried to just, you know, track things down, see what was going on. So I found this one, and I'm not going to say the name because then he'll block me, and then I won't be able to see the stuff without having to do some not extraordinary things, but you know, stuff that's just kind of a pain in the ass because you end up with all kinds of windows all over your fucking desktop. Anyway, so I was looking at the people that this was sent to, this tweet that were mentioned in this tweet. And one of them was $5bucks.com, which, if we recall from that original article that we read, that was by $5bucks.com advising people away from the Bitcoin.com wallet. So that's one. Then the next one, we got Real Coin Geek. I don't know who they are. And the next one after that, though, is Enchain Global. And they're all about the Craig Wright version of Bitcoin Cash, that is. The next one was BCH Boys, the BCH Boys. The next one after that is CoinEx.com. I'm assuming that's an exchange. Next one is Bitcoin Cash A. But the next one after that is Calvin Ayre, who is all about, he's with CoinGeek, as a matter of fact. And both of those guys, both of those entities are pro Craig Wright. So that's three entities that are mentioned there that are pro Craig Wright version of Bitcoin Cash. And then the next part of it says you should all recommend the Hand Cash app as the go-to wallet. Simple as that. Bitcoin Cash, blah blah blah. So. And the response to that is, we recommend CentB Wallet and Hand Cash app for both ease of use and security. So it seems that there is an attempt going on to direct the users of Bitcoin Cash to the version of Bitcoin Cash that Faketoshi has been promoting. And so it seems to me, just by that kind of string of associations, that what we've got going on here with that yours.com article, or yours.org article, is basically FUD against Bitcoin.com and Roger Ver from people within the Bitcoin Cash community. And so, the fact that it's going on via social media, it tells us that these guys are no better than the people for SegWit when they were going around FUDding shit in like medium.com articles and yours.org. and my answer to it is really simple, that the miners will do what they're intending to do. And whether or not they actually fork off and do the Satoshi's vision of Bitcoin Cash, I don't know. Whether or not they'll stick with the current variant where it's 32 megabytes is the upper block size limit. And I saw some mention of 300 megabytes, and I guess that's for the stress test or some shit like that. But anyway, as far as how they decide to fork, and this is my response to somebody concerning this particular issue, I said the miners will do what the miners do. Hopefully, they will stick with Bitcoin Cash as is. Let the others go fork their mothers if they want to fork. Thank you, Jihan Wu, for that association there. Fork your mother if you want to fork. Yeah, I really think that's the best option at this point, because from what I've read of the Satoshi's vision version of Bitcoin Cash, I'm not in agreement with them in going the direction of gigabyte plus blocks. In all honesty, I feel that just mindlessly increasing the block size limit without any real test of the current block size limit is stupid. It's stupid. There's no reason to just arbitrarily jump from one block size limit up. If there were times during the month where we were seeing full blocks or even near full blocks, that would be telling us that, hey, raising the block size limit would probably be a good idea. But if we're just jacking it up for no reason whatsoever, there's the possibility, I think, of it going just the way that a lot of people that have been fighting against bigger blocks have talked about, where a significant portion of the network would be blocked off just because they wouldn't be able to process the size blocks that were going through the network, that were being propagated across the network. They just wouldn't have the bandwidth for it. And see, I think that to some extent is an effort towards that. Basically trying to contain the interests of miners by negating the vast majority of participants. Now, I'd like you to think about that, though. If you cut off the people that can mine it, then you lose their interest in the coin. I don't understand why that's difficult for people to understand. If you've been in this space for any duration of time, you've seen this. As a matter of fact, most recently we saw this with Bitcoin itself, with Jian Wu just saying, you know what, we're not going to process SegWit transactions anymore. We're not going to include them in our blocks. We're just going to run the shit and whatever. If they manage to get the longest chain with SegWit, good for them. But we're not going to be processing SegWit transactions. I think that's a very interesting move, honestly. But it shows us that the power of cryptocurrencies is in the miners, and whether or not you can actually do so at a profitable level at the moment is contingent on your participation. If you just start mining, right, and rather than selling your coin at market rate, holding on to your coin until it hits market rate, or better yet, putting in a limit order for a much higher price. How is anybody going to know what the Bitcoin cost you to mine if you're not reflecting it in the price you're asking for it? If it's costing you $8,000 worth of electricity and hardware and bandwidth to mine a Bitcoin, then by golly, make some fucking profit, dude. When you put that thing up, when you do get the block and you want to put that up on the exchange for sale, don't sell it for market rate. And I have a feeling that that's what's going on in OTC markets, where participants are saying, you know what, rather than selling on these exchanges and getting ass raped, I'm going to pitch a huge volume of Bitcoin that I've managed to accumulate, and I'm going to pitch it on OTC markets and see if anybody bites. Now all of a sudden we see one of these transactions for 133,000 Bitcoin. It's a lot of fucking money, but it happened. And it was there was another one for I think it was actually the one for $194 million. That one, again, you got to be saying to yourself, these people are thinking about long-term investment. They're not just buying one or two Bitcoin. They're buying $194 million worth of Bitcoin at 6,000 and change worth of per Bitcoin. Either that or at an exchange rate agreed upon by the individuals involved. In the OTC market, they're not actually bound by the exchange rate of the offered by the exchange. And it might be worth it to buy $194 million worth of Bitcoin at one time for somebody, even if they are paying, 15-20% above spot. Because they're getting a significant amount of it for doing a specific thing. Personally, I think it's the whole Lightning Network business, where they're putting up very large hubs and handling the transaction fees and basically bumping everybody else who can't afford the transaction fees out of the blocks. That's my own little conspiracy theory concerning Lightning Network and other such off-chain options. There's absolutely no reason to be transacting digital abstractions of value in the stead of cryptocurrencies, because cryptocurrencies are themselves digital value. Somebody had to do the work to mine them, at least in the case of proof of work coins. So they represent that somebody actually did dedicate the time, the effort, the electricity, the bandwidth, and the hardware to mining it. No mining, no coin. That's how it works in proof of work. And people trying to replace that with trusted groups to decide issuance and governance, and fuck you. Fuck you. We've got the option of using coins that are directly accountable to us. So why am I going to trust you on the in-between to decide how the monetary value should come back to me? That's like completely antithetical to cryptocurrencies. Yeah. So, anywho, oh wow, that's kind of interesting. I might follow that one up. But anyway, I had some other ones. I had another. That's kind of interesting. I might go with that. But yeah, so the Bitcoin Cash fork, whether or not that's actually going to happen, I don't know. But I saw this other thing that interests me slightly more than than this whole infighting with Bitcoin Cash. This one I think is a little more important because I feel like quote-unquote stable coins that are directly associated with fiat currencies are probably a much bigger danger to the cryptocurrency space than any little temporary issue going on with Bitcoin or Bitcoin Cash. So I got this article here on Bloomberg.com, and they've actually, I guess, got a department now called cryptocurrencies in Bloomberg. That's amazing. Continuing. Bank tied to Tether goes quiet on relationship with crypto firm. And this is by Lily Katz and Matthew Leasing. Authored November 2nd, 2018, 9:48 a.m. PDT. So yes, penis and a vagina. A day after Tether said it had $1.8 billion stored in Bahama-based Deltec Bank and Trust Ltd., that bank refused to comment on whether it has a relationship with the controversial cryptocurrency company. Tether, which has faced questions about whether it actually backs its popular namesake digital coins with dollars as it claims, released a letter attributed to Deltec Thursday that said the company has an account with the bank. Deltec spokeswoman Melanie Hutchison, reached by phone Friday, declined to confirm or deny whether it's true. There's some legal or regulatory compliance question there, I'm sure. Anyway, this is the note from Deltec, supposedly. It's got their letterhead on it. Authored November 1st, 2018, Tether Unlimited, blah, blah, blah. Winshaw Road, Bank Disc, New Taipei City. So this is in Taiwan, Republic of China. Dear sirs, we hereby confirm that at close of business October 31st, 2018, the portfolio cash value of your account with our bank was $1,831,322,828. This letter is provided without any liability, however, arising on the part of Deltec Bank and Trust Limited, its officers, directors, employees, and shareholders, and is solely based on the information currently in our possession. Yours faithfully. See, and that's supposedly by Deltec. Continuing on, let's see if there's more to this article. Yes. Okay. Tether is a so-called quote-unquote stable coin, meaning that it's supposed to be pegged to the US dollar. It has become one of the most traded digital tokens because it can be used to buy other virtual assets on exchanges that don't handle traditional money. But investors have become increasingly concerned about Tether's stability because it refuses to be audited and has kept investors in the dark about its banking relationships. The letter from Nassau-based Deltec was signed with an illegible squiggle but carried no printed name. The chairman and largest shareholder is Gene Chelopin, who formed the company that became DIC, which produced well-known children's cartoons including Inspector Gadget, Heathcliff, and Care Bears. That's interesting. This is not the first time Tether has had to change banks. Most mainstream financial firms don't want to offer their services to cryptocurrency companies due to the risk of breaking Know Your Customer and anti-money laundering rules or the expense of keeping up with those regulations. Tether and related cryptocurrency exchange Bitfinex lost its relationship with Taiwanese banks in early 2017 after Wells Fargo & Co. and its correspondent banking relationship with the Taiwan lenders when it found out Tether and Bitfinex were crypto firms. The companies then arranged for Puerto Rico's Noble Bank to help connect them to customers and use their Crypto Capital Corp as a payment processor. The relationship with Noble Bank ended earlier this year, with the lender now seeking a buyer. Deltec then stepped in for Bitfinex and Tether. As a matter of fact, I heard that at one point or another they had some sort of relationship with HSBC. Like that would lend any additional credibility to them, right? I mean, part of the reason we're even here is HSBC, so. Anyway, so yeah, Tether. I swear, I really think they're the Federal Reserve. You know, that they're like a branch of the New York Federal Reserve, because they're the only entity other than these guys that have never been audited, and everybody just, quote, implicitly trusts that they have the backing for how many US dollars they're issuing, and trusting the volume that they're actually issuing, that you know, there's not actually more being printed that is being sold, or you know, that and those people are just like dispersing it slowly into the market without anybody else knowing, or indirectly internationally, because it seems that there's quite a bit of smuggling of US dollars going around. And I'm trying to find the article that I found on that. Oh, where is it? Is this it? US China money, CIA communications? No. Man, I got so many tabs open. Blah blah blah. Oh, I might go into this one. Oh yeah, definitely. But anyway, man, Tether. They keep bumping around between exchanges, and so that really lets you know what kind of a hot potato they actually are. And the fact they lost their US dollar peg recently, it kind of gives you an impression that they're not exactly above board, and that there is some massive hole in their balance sheet. And hold on one second, I got to rehydrate it. Much better. Oh wow, Bitcoin's up at 64.78 right now, according to Cointelegraph. So that's broken the recent trend. I heard everybody panicking or read everybody panicking yesterday on Twitter. It's kind of humorous, really. Anyway, this next one I got here, it's on Cointelegraph.com, and this has been something that we've commented on quite a bit on this show. But this is by Joseph Young, authored approximately 12 hours ago. Trend of global crypto mining. Despite the US-China trade war, activity surges as Samsung and GMO enter. Throughout 2018, the cryptocurrency market experienced the fourth worst correction in its 9-year history, as Bitcoin lost more than 69% of the value from its all-time high of $19,500. Despite the substantial decline in the price of Bitcoin, which heavily affects the earnings of miners, the hash power of the Bitcoin network has continuously increased throughout the past 10 months, from its 15 million terahashes per second to over 50 million terahashes per second from January to October. As portrayed by the research of blockchain analyst Barclay James, the break-even cost of mining Bitcoin at 35 million terahashes per second is around $6,900. The formula employed by James considers the hash power of the Bitcoin network, the hash power of an ASIC Bitcoin miner, and the efficiency of each miner in producing Bitcoin. Units equals global hashing power divided by unit hashing power divided by unit efficiency. Given the cost of Bitcoin mining when its hash power is currently around 35 million terahashes a second, and the value is $6,400, the break-even cost of Bitcoin is in the $7,000 to $8,000 range, which means at $6,400, Bitcoin miners are losing money by generating Bitcoin and are solely relying on their expectations of the Bitcoin price to eventually increase in the months to come. For miners outside of China, specifically the mountainous region of Sichuan, known to have the cheapest electricity in Asia, and a cold climate that naturally cools down cryptocurrency mining equipment, it is even more expensive to mine Bitcoin. The paper of Barclay James reads, quote, China has some of the world's cheapest electricity rates as well as average temperatures consistent with temperate regions. This is important as cooling is one of the largest overheads in mining. In addition, the country's generally low operating costs also give it a competitive advantage. In fact, current estimates place 70% of the global hashing power in China, the majority of which is located in the Sichuan region. Since June, Bitcoin miners have been mining the dominant cryptocurrency at a significant loss. The fact that the hash power of Bitcoin has continually risen throughout the bear market of 2018 demonstrates large activity in the global cryptocurrency mining sector and the confidence of miners that the industry will recover as the year comes to an end. Bitmain and its antminer sold at a discount. BitMEX Research, a cryptocurrency firm that operates as a research subsidiary of major digital asset exchange BitMEX, disclosed in its paper in August that Bitmain, the dominant conglomerate in the cryptocurrency mining sector, has been deliberately selling its latest Bitcoin ASIC miner, Antminer S9, at a lower price. In 2017, Bitmain sold more than 1 million Antminer S9 miners and another 700,000 of them in the first quarter of 2018. According to the researchers who calculated the disclosed gross profit margin of Bitmain in 2017 and the implied cost of each miner, Bitmain has set a negative profit margin of 11.6% for the Antminer S9, its main product. The researchers stated that the distribution of Antminer S9 miners at such a low profit margin and the sudden increase in the sale of the miner in the first quarter of 2018 suggests the company has employed a strategy to outsell its competition by underpricing its products. Quote, these low prices are likely to be a deliberate strategy by Bitmain to squeeze out their competition by causing them to experience lower sales and therefore financial difficulties. In our view, herein lies the key to one of the main driving forces behind the decision to IPO. A successful IPO may increase the firepower available to continue this strategy and eliminate an advantage rivals could have by doing their IPOs first. The paper also proposed that the company may simply have too many Antminer S miners in its inventory. In June 2018, Bitmain was criticized for shipping Antminer S9 miners caked with dust. Some miners alleged the firm of sending old or used ASIC miners. In response to this, Bitmain stated that all traders who received defective or affected Antminer S9 miners would be fully compensated. Quote, any product that can be imperfect, and there will be shortcomings in the process of enterprise development. We have also compensated the miners who have received mining equipment with inadequate computing power, and the mining equipment are now being run properly. Whether the decision of the firm to sell its main ASIC miner with a low profit margin was due to its competition or to clear its inventory. The end result was the distribution of an increased number of efficient and high-performance ASIC miners to the global mining sector, which ultimately led to the increase in the hash power of the Bitcoin network. Is Bitmain's dominance in danger with the emergence of Samsung and GMO? In the first quarter of 2018, Bitmain generated twice the profit of NVIDIA, the world's largest graphics card manufacturer. NVIDIA generated $550 million in pure profit, while Bitmain recorded $1.1 billion in profit from January to March. The lucrative business model of Bitmain and its high profits led GMO and Samsung, two of the most influential technology conglomerates in Japan and South Korea, to enter the global cryptocurrency mining industry. GMO introduced its own ASIC miner with competitive specifications in comparison to Bitmain's Antminer S9. Samsung Electronics has allocated a portion of its foundry in Suwon, South Korea, to manufacture cryptocurrency ASIC miners in partnership with emerging companies in the mining sector. When Samsung Electronics first announced its decision to target the global cryptocurrency mining industry, it emphasized that it remains unsure whether it can improve the company's revenues in general. But the emphasis of the establishment on its mining venture was to engage in an emerging industry like crypto, given that it has successfully penetrated into insurance, fintech, electronics manufacturing, car making, and shipbuilding in the past several decades. Samsung securities analyst Huang Min-seong said in January of this year, quote, Samsung Electronics could increase its revenues through ASIC chip manufacturing, but because of foundry only accounts for a small portion of the company's semiconductor manufacturing plant, it is difficult to predict that the firm's mining venture will have a significant impact on the company's revenues. Since then, Samsung has aggressively expanded its mining businesses, seeing an increased demand in the market. The uncertainty of Samsung towards cryptocurrency mining demonstrated the firm's unwillingness to commit to the industry unless the company sees significant potential in both short-term and long-term growth of the market. Most recently, Samsung signed a deal with Squire, a Canada-based cryptocurrency mining corporation that raised $19.5 million in August to develop cryptocurrency mining equipment to manufacture ASIC miners on behalf of the Canadian firm. Around a similar period, Taiwan semiconductor manufacturer Co. TSMC, the world's largest independent chip maker, slashed the growth target of the cryptocurrency mining sector from 9% to 6.5%. The conglomerate stated that the weakening of the demand for cryptocurrency mining led the firm to decrease the growth target of the industry, but it remains unclear whether the report is exclusive to Bitmain, given that TSMC is the manufacturer of Bitmain's ASIC miners, or to the rest of the industry. Quote, however, our business is also negatively impacted by further weakening of cryptocurrency mining demand. As a result, we estimate our 2018 growth rate will be about 6.5% in US dollar terms, which is close to the foundry's industry growth, but slightly below our 7% to 9% guidance given in the last conference. New multi-million-dollar mining facilities open. Despite the conflicting viewpoints of Samsung and TSMC towards the demand for cryptocurrency mining, in the past several days, 2 multi-million-dollar mining facilities have opened in Armenia and Colorado. Local publications in Armenia reported that a new $50 million digital asset mining facility was opened on October 19th, with 3,000 ASIC miners to mine Bitcoin and Ethereum. In the upcoming months, 120,000 ASIC miners are expected to be added to the facility. It was local real estate firm Multi-Group Concern, MGT, and Malta-based technology company Omnia Tech International Company, which created the facility with the support of the government and local authorities. The plan to build the facility was originally released in April when Omnia Tech founder Robert Velge said that the two companies intended to invest more than $2 billion in mining and crypto-related businesses in Armenia. Quote, "We will also help Omnia Tech with the establishment of Financial Technology Park and the Data Exchange Center in Armenia. We intend to create here a blockchain-based center for the development of new information projects, which will turn Armenia into a high-tech platform." On October 25th, MGT, the largest mining facilitator operator in the U.S., announced that it will establish another large-scale mining facility in Colorado equipped with 6,300 Bitmain S9 miners. Already, MGT operates 6,800 Bitmain S9 miners and 50 GPU Ethereum mining rigs in the country. MGT COO Stefan Schaefer emphasized that despite the decline in the price of Bitcoin, the company intends to, quote, "run into the burning building to find opportunities," which in this case is to mine Bitcoin. Regulation and the state of the mining sector. Many of the world's largest economies are in the process of implementing practical regulatory frameworks to facilitate the growth of mining companies, actually to limit the access of mining to their people. Authorities in South Korea, Japan, and the U.S. have welcomed mining facilities to operate with low-cost energy. Countries with ambiguous cryptocurrency regulations such as China and Russia have also demonstrated a neutral stance towards mining. Throughout the past 15 months, China has banned virtually every business and activity related to the cryptocurrency sector, including trading, events, and over-the-counter investment. However, it has opened 2 cases of cryptocurrencies processing transactions and mining digital assets. Several regional governments in Russia have also opened up to cryptocurrency mining, leading various initiatives to convince major mining companies to launch mining farms in the country. In August, Deputy Governor of the Leningrad region, Dmitry Yalo, said at the opening of a new mining facility in Russia that the region intends to lure in more mining centers in the years to come, with low electricity prices, qualified personnel, and a naturally cold climate to cool down ASIC miners with no additional costs. U.S.-China trade war. The conflict between the U.S. and China began to affect chip makers and mining equipment manufacturers based in China, including Bitmain. The 27.6% tariffs on the Antminer S9 has made it significantly more expensive for buyers outside of Asia to purchase the miner. Previously, Bitmain was able to ship Antminer S9 miners with no tariffs as the product was classified as a data processing machine. The sudden imposition of tariffs against electrical machinery apparatus, which includes data processing machines, has created an inefficient ecosystem for China's ASIC miners. The imposition of the tariffs by the U.S. against China comes in a period in which U.S. President Donald Trump has expressed concerns about the lack of reciprocity between the two countries. For many years, China has been able to ship products to the U.S. with near zero tax and fee. Thus, Amazon's Vice President of Global Policy, Paul Meisner, said once, quote, "The cost to ship a 1-pound package from South Carolina to New York City would run nearly $6. From Beijing to New York City is $3.66. South Korea and Japan remain unaffected by the tariffs, and with practical regulatory frameworks established by both countries, Samsung and GMO are expected to continue their successful run in the global mining sector. As of current, despite the significant drop in price of major cryptocurrencies, the demand for cryptocurrency mining remains relatively high, as seen in the rise in hash rate on the Bitcoin network and the expansion of Samsung, GMO, and Bitmain's operations. Major regions have established positive regulatory frameworks towards cryptocurrency miners and companies, which could lead to the increase in the establishment of mining facilities by investors that foresee a substantial surge in the valuation of crypto markets in the midterm. And actually, I think anybody really investing in mining now is thinking more long term. You don't just fucking pitch tents and start throwing miners under them for no reason. It's because you see a potential in the future for significant profit. But yeah, so there you have it. We've been talking about this for a long time on the show, that the FUDding that we hear out of NVIDIA is exactly that. They're questioning themselves with regard to how much they're going to be making on miners. It's or off of miners rather, on their GPUs. It's kind of stupid. It's because these people, GMO and Samsung, they're not going to be waiting for NVIDIA to figure their shit out and figure out that they have some competitive advantage in this space. And I really think that a lot of the misreads that they have had concerning this market have caused them to make some unfortunate comments to the public concerning their investment in cryptocurrencies, with regard to mining and whatnot. And I think that lack of confidence is going to transmit back to them. That eventually other GPU mining operations will come up and basically snatch their lunch out from under them. Come and eat your lunch. Yeah, so I really believe that mining is going to become something that the average person is more inclined to do as we continue to experience these, how should I say it, squeezes with regard to liquidity and barriers that we've experienced, like the block size issue on the Bitcoin network. I think that's going to end as more people get educated about it, about exactly what they're investing their time and effort into. When they're saying to themselves, hey, you know what? If we were mining bigger blocks on the Bitcoin network, we would be making money that Bitcoin Cash is currently making. And I think once we get through this November debacle with regard to whether or not we're actually going to have a split in the Bitcoin Cash and have a fork, I think once that's settled, we're definitely going to see an increase in use of Bitcoin Cash, and I don't really believe it's going to go the Bitcoin SV way. I think that they're resorting to underhanded tactics like the ones we've seen previously with regard to SegWit on Bitcoin. That ultimately those are going to yield negative results. We've already seen that with Bitcoin, most recently with Jihan Wu turning off support for SegWit on his miners. So, yeah, again, miners are the networks. No miners, no network, no coin. Gotta have them. So, yeah, get in the game, kid. Anyway, let's go ahead and throw back down into some music. And you know who I hardly ever play? And I'm kind of bothered by it, honestly, but it's because they have really, really, really long songs for the most part. I'm going to go ahead and throw this one in just because it's kind of, I don't know, it goes along with the subject matter. Machine Head, Block, here on Coin Metal. And that was Sixth with Sanguine Seas of Bigotry. And yeah, I try not to have any of that towards anybody in cryptocurrencies, because as far as I'm concerned, we're all cryptocurrency users. Whether or not we actually have live wallets or what coins we're supporting, none of that really matters. If you're human, you're a potential cryptocurrency user. And so trying to delineate between users, hey man, I think we do enough of that delineating ourselves. We really don't need any help there, you know? In any case, it is with that I'd like to close out this episode. We will be back again on Monday at 8 p.m. Pacific Standard Time. And so until then, I'd like y'all to trade safe. Do your homework. Watch out for your own bunghole, because nobody else is going to do it for you. Thank you so much for listening. I certainly do appreciate the support. As I said, we will be back again on Monday. And our last dance for the evening, it's got to be Helmet. Life or Death. Here on Coin Metal. Thank you again for listening, and you all have an excellent weekend.